Hello and welcome to Investing in Dividend Stocks. My name is James Boyd. We welcome you here today. Cameron May is out today, so I'll be taking his place and teaching this class. Interesting topic, as we'll see in just a moment. Now, our focus actually here today is talking about dividend aristocrats, and we'll take a look at that in just a second. I wanted to say hello to Lawrence, Cecil, Kevin, Eva, hello to you, and also the Nashville crowd. Douglas, Josh Pink, aloha, Scott, back to you, and many others. And we also have Brent Morse with us in the chat. We welcome him as well. He's a fellow instructor. Now, this is not a one-off session. We meet each week on the topic of investing in dividend stocks. Now, if that's a focus of yours, attend the session each week. It's also live and recorded. Now, just real quick as we get started, Brent and myself and all of us instructors, we do post educational content on X. There's my handle. Brent will post his handle in the chat. That way you can just click on it and follow him as well. Now, just real quick as we get started, remember the information here is provided for general informational purposes only. And also remember that when we talk about dividend paying stocks, it's included but not limited to the risk that the stocks may reduce or stop paying dividends. Now, they could also raise it as well, right? Now, also remember that when we talk about examples of using technical analysis, Schwab does not recommend the use of technical analysis as a sole means of research. We talk about this all the time, right? Fundamentals, very interesting. It's really is the driver of the business, right? Things like intermarket analysis, how the correlation, okay? And we've talked about that a lot in the last 2 weeks, and it's an exciting topic. It really is, to say the least. And also remember that our examples that we'll do them on the Paper Money software application. And just make sure you're aware of that. There's a class that teaches you how to use a Thinkorswim platform. I'll show you that in a moment. And also remember when we talk about investing involves risk. Now, just real quick as we get started, if we do bring up fixed income, right, I'll make a comparison of that here today. I'll show you if you said, hey, where can I see the information on that on schwab.com? I'll show you that. That is also a nice kind of way to kind of gauge the fixed income return, okay, compared to the dividend yields. We will maybe look at one or two REITs here today, understand what the risk is with those as well. And also, big comment here, statement, which is diversification does not ensure profit, does not protect against losses in declining markets. So just because we buy dividend paying stocks, there might be sometimes less risk, but there's still risk. Now, as we get started, we'll talk about some of these dividend stock basics. We're going to look at the market first before we get into the dividends, and then we're actually going to dive right into the aristocrats. So let me show you a couple charts. This is going to dovetail into when we talk about dividend paying stocks. Now, the first chart I want to pull up first off is, let's go to the SPX, okay? Now, I want to also bring up something that I wrote on X. Now, I've been in the stock market since 1996, 30 years, okay? Now, I've seen a lot. I have done some smart things. I've done some foolish things, and that's called, you get experience, right? And over my time in investing, it's just interesting. It doesn't matter. You could be in a market like 2017 when the market went straight up. Every time the market pulls back, this is the scenario that plays out. Now, I wrote, investors are funny. I'm waiting for a pullback, they say. You get a pullback. Then the price goes up, and it doesn't matter in what type of market. I don't trust the rally, they say. Going to wait until a breakout. Stock breaks out, and they say it's too high and need a pullback. This is a crazy cycle of never-ending waiting. You know anyone that said that? Because I think if we've said that or heard someone say that, that person might be a millionaire just based on every time that I hear that comment. And it's not really trading systematic. It's really trading based upon your feelings. How's that working? Now, for me, it didn't work out that well, okay? So what we're trying to really do is make investing decisions based upon proven investing principles and practices. That does not mean they work all the time. That does not mean a guaranteed return, but we're actually trying to be disciplined to the principles of investing and having that actually over time. Now, super quick, this is actually when the Iran issue started, right? This is actually where we actually had the movement up. This is March 31st. Now, I just want to kind of show you where we are. Here we are 9 days in to the second quarter of the year. We've actually had a little push. Now, when we look back, we would say, well, duh, James. You could say that to me. I'm not going to be offended by that. Duh, James. That's where you had the moving average crossover, and that's where I would have gotten in. Oh, it's so easy when you look back, right? Okay, please chuckle, okay? Now, what you're now going to notice is we've had some interesting moves to the upside. Every day that we've actually had when we look at the candlestick, we've closed above that shorter term moving average every day. How many? Every day, okay? Now, so the S&P 500, we're looking at a group of sectors, 10 sectors, and you're seeing the average of those sectors moving to the upside. When we look at the NASDAQ real quick, what does that look like? Well, when we take a look at the NASDAQ, you're going to kind of see that we had a channel. We broke down through the bottom, and we've snapped back to the middle of the channel. Interesting. One of the areas that we cannot not mention is semiconductors. Does that look bearish to you? Which one of those stocks have you been looking at? I mean, you got to ask this. If you're a bearish investor and the semiconductors are breaking out to the upside, is that a bearish market? Don't ask me direct questions like that. It's a direct question, okay? So what's interesting about this is, like, my friend could be saying something, but what we're seeing in the market is different than what my friend is saying, right? Now, I can have opinions, doesn't mean they're right, okay? The biggest thing is the investors trying to align themselves to not opinion, but what the chart is showing, okay? All right, now, so when we look at, let's say, the 4 indexes, which I just pulled up, and I included stocks, interesting. I think the one to also note right here is also on the VIX. VIX pushing down. Remember, if you're a stock buyer, you want that chart going down. I read yesterday a very interesting comment that's going to dovetail right into our discussion here today. A billionaire investor said, quote, "When the VIX goes higher, my emotions become less." Interesting. I'll leave it at that. As the VIX gets higher, my emotions become less. Okay, think about that. Now, when we talk about sectors here today, just real quick on the sector front, because this is going to come into some of our examples. Got utilities here today that actually hit a brand new high. We're going to see this in a couple examples. We also, for example, had industrials shooting to the upside. When we say industrials, we're also saying transports, okay? And if I bring up, let's say, transports, we're using the proxy $DJT. And again, some overlap between transports and industrials. Brand new high there. Now remember, a lot of people talk about Dow theory. If the Dow hits a high or transports hit a high, that's usually not a bearish signal and so on. That's another thing someone might look in terms of sentiment. Real estate, if we looked at real estate, again, we've talked about interest rates, okay? I don't know, that looked like a classic moving average crossover to me, okay? How do you read it, right? Now, if we look at, let's say, the discretionaries, which we're watching oil, of course, kind of a little reversal back up. Staples, not necessarily crashing to the upside, but this area normally lags a little bit when the market rallies. And then the last two that I'll bring up real quick before we dive into the dividends, you're going to see base materials getting a little push and financials getting a little push. Now, remember, we said if we're going to be in a more healthy market, we need the financials, which is what we call the lubricant, okay, to the engine of the economy. The lubricant being cash. The lubricant being that they're willing to issue credit to people that need it, okay, and so on, and want to take that. Now, our focus that we want to talk about now is really talking about dividend aristocrats. A couple things that we want to kind of point out here, okay? So first off, let me bring up a list of stocks, okay? Now, first off, I'm going to share this list. So when we talk about dividend aristocrats, we're really talking about stocks or companies that have had a minimum of 25 years of dividend increases. 25 years. Now, you might ask yourself, why is that relevant? We'll come to that, okay? Now, number two is they must have S&P membership. They must be listed in the S&P 500 and have a market cap of at least 13.1 billion. Now, you might be saying, what is market cap? Well, market cap is if you took the stock price times the number of shares outstanding that they have, what's the value of all those shares? So the biggest actually thing is we want to make sure we're not buying overnight companies or small companies that are working out of their garage. These are businesses that have been more proven over time. Okay. The other thing is they can be found in sectors like staples, financials, utilities, healthcare, and so on. Now, some people might say, like, well, companies like this are boring. You got to remember something is someone's not saying that they have to have their whole entire the portfolio invested in dividend stocks. That's not what we're saying. But they might have a portion of some of their money in dividend stocks. You got to also understand how many people might be, let's say, over 50, okay, and might have a significant amount of capital, and they're trying to have that capital work for them, where they might get higher risk-adjusted returns. When we talk about risk-adjusted returns, we're talking about the returns over the volatility, price movement, in other words, okay? And we're also saying that the price movement is not a guarantee, neither is the dividend, but if we could get the dividend, it might help have a gain potentially or hold value, okay? Now, what's the risk of the dividends as we look at some of these companies? Well, the biggest thing is they can cut the dividends. We saw a company like Walgreens recently, 2 years ago, cut the dividends. Probably 10, 15 years ago, we saw a company like, what was it? Washington Mutual completely cut the dividend and went bankrupt, okay? And the stock went to zero. So just because they pay a dividend doesn't mean indefinite. But the biggest thing is we're going to be watching the earnings of the company. We'll talk about that in just a second. The one also thing that we want to kind of bring up is you can get a company example given like Walmart, where you could get a lot of people that have a focus on income stocks, and your thought process is, oh, they're cheap. Well, they might not be cheap because a lot of other people are invested in it, and it's pushed up some of the valuations or the price. And what that's also done is it makes it where the yield might not be as high. The other thing I want to kind of bring up is tomorrow morning at 9:30 a.m. Eastern, I teach a class on ETFs with Kevin. Kevin's out in Dallas. I'll solo teach that tomorrow. If you would like to know, is there Dividend Aristocrat ETF? Talk about that tomorrow, because we talk about categories of investing, and we'll talk about that ETF ticker tomorrow that is really looking at the aristocrats as a whole. Now, let me share with you just real quick a list, okay? Hopefully you don't mind if I share. Now, this dividend aristocrat list, this is one of two lists. And the purpose of that is that way so we can use scripts. Scripts usually work best if you have a list of 25 stocks or less. So I'm going to send you the list in the chat. Now, it's not my list, okay? This is the Dividend Aristocrat list as of 2026, okay? And what I'm going to do is I'm going to share this list, and I just labeled it as Dividend Aristocrat List 1, okay? This is not my personal list. This is just a list of literally dividend aristocrats. Now, if we look at the second list, you're going to see that if I say share that, and I'm going to put it right in the chat. Now, if you're watching this on recording, I'm going to post this in the description of this video. Now, our goal here is I want to kind of just explain some things before we look at some examples. Now, the goal is not to have a list. The goal is to identify maybe some candidates from the list. Before we look at some examples, I just want to kind of speak to something in terms of the fundamentals, okay? So number one is, I'm just going to show you this. You don't have to have this on top per se, but I want to kind of just explain something to you. Now, by the way, on the column headings, you can right-click on the column heading. You could apply different filters that you're trying to actually see. I put on EPS, I put on dividend, I put on dividend payout per share as percentage of earnings per share, the dividend yield, and the dividend frequency. Why does this matter? Well, obviously it's a dividend class. It's kind of pertinent information, right? Now, First off, why do we start with earnings per share? I want you to think about the earnings per share like a pizza, okay? And I want you to imagine that, for example, that the pizza has 5 slices. Now, I'm not trying to make us hungry, but we're going into lunch. Now, so you got a pizza, and that pizza is really the earnings per share of the company. Earnings per share is the net income over the shares outstanding. Now, let's say that the earnings per share is $5. And let's say the company literally gave half the pizza away. And they gave half the pizza away to the shareholders. Now, here's my question. Is the company trying to make the stockholders rich? That's a question. Is the company trying to make the stockholders rich? That's a question. Okay. Now, so if they gave half the pizza away to the shareholders in terms of dividends, their earnings, okay, the net income, what does the company actually do with the other half? Well, they might put it in savings, retain earnings. They might actually maybe invest the money and so on, right? So the risk becomes the driver of the dividends is the earnings per share. So when we go over earnings, this is why we're watching what the earnings are. Are the earnings growing? Because if the earnings are not growing, the dividend might not grow. Okay, so that's number one. The second part of that is if the dividend is becoming a bigger and bigger piece of the earnings per share, there could be some risk. I'll talk about that in just a sec with Nike. So let's say, example, given that the company says, look, we're so willing, we love our investors so much that we're going to give 4 out of 5 slices in terms of a dividend to the investors. Well, what does that do? Well, it cuts down the amount of savings of the company. It cuts down on the investment in the company, et cetera, that they can go out and make. They're giving all the money back in form of a dividend. So, you kind of like the company to give some, but you want the company to be self-sufficient and sustainable and able to make investments. As investors, we always want more, right? But now, so number one is we can see the dividend. That's going to be in dollar amount. When we look at the dividend payout percent, you've got to be aware of that because the higher percent they're paying, the more they're at risk of maybe the company being having less cash and less investment money to use. The dividend yield expressed in percent and the dividend frequency, which most of these are going to be quarterly dividends. Okay, now let me show you a quick example of something I like to look at besides the column headings. Okay, now I'm going to go back to a stock, and the stock that we're going to look at is Nike. Okay, now these labels up at the very top, let me also share this. If you're watching on recording as well, you're going to see that I'll post this in the recording as well in the description. Okay, now we're going to see just recently we had a stock Nike announce earnings. Okay, now Nike, just do it. Well, it doesn't look like a lot of people have been doing, at least buying the stock. Okay, now if we look at the very top, some information that we want to make sure we're aware of. Now you're going to see that we can see the EPS actual was 35 cents. And the EPS estimate was 29 cents. Okay. So we can see the earnings estimate, 29 cents. They actually got 35. Now, what you're now going to notice is in this case, so the EPS was 35 cents. Okay. Now, what's kind of the problem here? Well, the payout ratio was 108. Remember the pizza analogy? Remember I said there's 5 slices of pizza? Well, Nike just gave away all their slices. Now, if the company is paying more out in dividends than the earnings per share, where do they get the money? Well, number one, they might have to take out money of their savings. Okay. Number two, they might have to borrow money. Well, geez, that doesn't sound great. It's not. Hence, the stock's going down. Okay. Could they cut the dividend? They could. Could they cut the dividend entirely? They could. Now, if the company actually does that, that's kind of bringing some red flags going on. Now, by the way, remember, what was their actual dividend? 35. Their earnings per share was 35 cents. When you go back to the trade tab for just a moment, what was their dividend? 41 cents. They paid more in a dividend than their earnings per share for the quarter. Okay, now, in some of these examples I'm now going to show, we're not going to see that example. I want to show you a bad example. Nike is a tougher example, of course. Okay, now, you're welcome. Okay, now let's go to something just real quick. Now, do you guys mind if we kind of walk through some examples? Now, what I did is on the left-hand side, as I brought that dividend aristocrat list on the left-hand side. How do we do that? Okay. Well, so first off, let me just say, if you said to me, James, I honestly don't know how to put that on my platform. Can you show me how to do that? Yeah, let's do that. Okay. So let me share this again, and I'm just going to show you how to put this on the platform. Okay. Because that'd be helpful. Now, the very top right, we're going to go to where it says setup. All right. That's not too bad. Open shared item. All right. That's not too bad either. Okay. Now, this is where you can just copy and paste. This right here that I'm copying and pasting is that second list for dividend aristocrats. I'm just showing you how to put it in, okay? Now, once I copy and paste that in, I'm going to now click preview. Or actually, it was the first list. And what you're now going to see is I'm just going to put a little star there, okay? And I won't take it all the way through. But it just takes what I called it, dividend aristocrat list number 1, and I'm going to say import that. Now, where does it go? Well, okay. So just click on import. And once we do that, we click on that drop down right there. We go down to where it says personal, and you're now going to see that it's going to say dividend aristocrat 1 and do the same process for 2. Okay. Now, wherever we have a watch list, there's going to be a drop down. Let's work through some of these stocks and see if there's some examples of some setups. Now, on the left-hand side, you're going to see a drop down. Okay. Where do we see the drop down? Right there. Now, if you say, I don't have that, where can I get that? Click on the 3 lines. We're now going to go to where it says switch gadget. Switch gadget allows you to change what do you want to see on the left-hand side. I want to see a watch list. Okay. Click switch gadget, watch list. All right. Now, we're going to spend the rest of the time talking about entries. Okay. Here we go in this case. Now, our goal is we're trying to find companies that pay a dividend, number 1, and then also have a trend. Okay? Now, the list that I'm looking at now, when I bring this up, and let's go to the list number 1, there, we see stocks that actually are, let me widen that out. What I'm going to do is on the left-hand side, I'm going to click on that left-hand side, and we're going to look it through, and I want you to tell me if there's something here we should look at. What we're looking for is a trend. We'll look at, for example, the yield and so on, but these are the dividend aristocrats. I want to see if there's actually some entries potentially right now. Now, if we go back to this real quick on the Market Watch, we can go back to setup, and one of the setups that we normally have is the technical kind of viewpoint of this. And this is just really loading up really a different way to kind of look at these. And we'll try to get that to actually load for me. Maybe that might not go as I'm doing this, but we'll kind of, let me go back to that. Let me see if that actually pushes that. It's just reloading. Now, the biggest actually thing is we now want to look at the technicals of these charts. Okay. Now, that's not what I want either. I'll bring that back up. So what I want to do is I want to look at some of these charts, and I want to bring up some of the stocks in the list. Now, again, how do I put that on? I'm going to click on that, go to personal, bring up dividend aristocrat 1. You're now going to notice that I'm going to go down through these charts. Now, I'm not going to look at GWW. It's a bigger price dollar stock. I'm going to try to imagine that I'm starting with a smaller size capital portfolio, but it's been moving to the upside. Okay. Now, the other thing I want us to kind of take a look at is some people. Now, remember, we said industrials, right? And when we actually looked at the industrials, you're going to see that one of the stocks in industrials is Caterpillar. Ladies and gentlemen, that actually hit a brand new high. Okay. Now, we joke quite a bit about Caterpillar. Some of you know that. I'm not going to talk about that here today, but that's actually hitting a brand new high here today. Now, SWK, Stanley Stanley Black & Decker, it's kind of in a basing pattern, maybe trying to reverse a little bit. Okay. Walmart, for example, when you look at that, that is kind of had a pullback in the price and starting to move back up. Some investors might say that kind of looks a little interesting. Pullback, bounce, okay. What type of candle was that yesterday? Bullish engulfing, going to a short-term high. Okay, fine. Okay, I'm just kind of showing you a couple stocks in the list. When we look at a stock like Pepsi, this has also been one that's kind of in a pullback, okay, as well. Kind of has a short-term pennant pattern on the right-hand side, has earnings coming up. Earnings on the dividend aristocrats, it's not that they're non-movers. They just don't tend to be like tech stocks, okay? The earnings, the revenue, they tend to be more consistent. Now, when you look at Pepsi and Coca-Cola, they look like they want to reverse here to the upside. Now, I'm going to look at some others that I wanted to kind of take a quick peek of. And one of the stocks that was in that list, and let me see if it's in this one. Now, I'm going to go back to that second list. And one of them that was in there was a stock knee. Okay. Now, when I look at knee, there's a couple stocks, and let me just bring up, we'll start with knee first, okay? Now, remember, knee is one of the stocks that is in the utility space. Now, remember, think of this as we're looking at the sector, okay? Now, if you said, James, I'll be honest, I don't know anything, okay? How could I see the stocks in the sector? Easy. Go to Market Watch. You're going to watch the market. We're going to go to Visualize, okay? Once we actually do that, Market Watch, Visualize, we're now actually going to go to where it says S&P 500. Now, when I click on that S&P 500, let me show that again, Market Watch, Visualize, click on the S&P 500. If you isolate to the utilities by themselves, here is an immediate list. Please do not spend 4 hours trying to create a list that has already been created, okay? These are the stocks that already actually meet the criteria to be on the S&P 500. They could have trends. Now, when we look at a stock example given knee, which is the biggest market cap, hence the biggest square rectangle, we're going to look and see, could this be an opportunity for a potential trend? Now, if we go back and say, what type of trend or price pattern do we have on the chart? What do we see? Now, if we look at this and kind of say, what do we got? It kind of looks like a flag, right? Where we ran to the upside, a little bit of a pullback, okay? And that pullback was created by lower highs and lower lows. Just recently, like 2 days ago, the price breaks the top of that resistance line. So when I say pull, we're talking about the price ascension. When we say the flag, it's really the support and resistance. That flag can kind of be like where it runs up, and the flag is kind of more sideways. It could also pull back a little bit like that. It doesn't matter. Now, here's the deal. We're just watching to see, can we break the upper line? On knee, we did. Okay, now, what type of dividends? When we go back to, let's say, let me bring up just something real quick because I switched that. And reload that. I'm going to put those labels back on if I can. Let me just see. Yeah, there we go. Sorry, changed the platform and it actually took off my labels. Let's put it back on. Now, first off, when we actually look at knee, what do we got in terms of some of the data? Well, it has a P/E ratio of 26. Now, if we're talking about dividend-paying stock, that's not completely unusual. It's probably maybe a little high. Typical dividend stocks, maybe 15, 25-ish, okay? The yield, 2.62. Not the biggest yield percentage, but that's not necessarily huge per se because it might actually have more potential price appreciation. there might be a bigger component to growth. Now, remember we talked about the slices of pizza, right? What's the payout percentage of the earnings per share? They're paying out almost 70% in terms of a dividend relative to their earnings per share. Big chunk. Now, if we take a look at this, how does the investor try to buy the shares if they wanted to? We're going to right-click on the chart. We're going to go down to Buy Custom. We're going to go to with Stop. Now, I want to kind of speak to something we said before, which is, okay, I want you to think back to what happened to the market in like the last 45 days. Okay, think back to what the market did. It pulled back about 10%-ish, right? Well, if I look at the example of knee, how much did it pull back? Well, I said, how much did knee pull back from the very high down to the very low? How much did it pull back? Well, it pulled back about 7%. Major point here, it's not that these don't go down. They just might go down less. Now, language like potential lower volatility, lower beta, okay, stocks that are less correlated to the market and so on. You'll see it went down, but it was actually one of the earlier ones to go back up as well. Why? Because some investors wanted to hold the stock because it might have had that dividend component to it. It also might be a business that might be more apt to go through different shifts in the economy, okay? It doesn't matter typically how bad the economy gets. I'm probably going to need lights in my house and so on. We get it. And run electricity through the fridge and so on. Now, what I'm going to do is going to right-click on this chart, Buy Custom. I'm going to go with Stop. So right-click on the chart, Buy Custom with Stop, okay? Now, when I do that, what I'm now going to do is I'm going to look at the stop underneath. So first off, in green, we're buying those shares. In red, we're selling those shares. Now we get to specify at what point would you say, hey, this trend is not trending anymore? Well, the biggest thing is if we go stop data GTC, good till canceled, at what point would we say I don't want to own the shares anymore? Now, this is another point of a dividend investor. They're probably not going to get out if it goes down today. They're going to want to maybe consider getting out if it takes out maybe a 2 to 3 month long support level. Okay, if it goes down tomorrow, up the next day, down tomorrow, they're not trying to just get price appreciation. They're trying to be exposed to the trend and get money from the dividend. Now, where's that 2 to 3 month long support level? It's probably right around 90.41. If I take 90.41 less 2 to 3%, it's going to give us 88.60. Okay. Now, I want to ask a question of you. Some people might say, well, James, why wouldn't I just invest in a CD? It gives 4.5%. Why would I not just invest in a T-bill, Treasury bill? And it gives 4.3%. Remember, those are nominal percentages. Those are not real, meaning it does not include inflation. So why do people look at dividend-paying stocks over CDs, over perhaps T-bills in some cases? Well, they're trying to get a higher rates of real return. So if you said to me, well, James, I had $100,000, I got 4.5%, I made $4,500 a year, and I feel really good about that. Now, you got to remember something, that 4.5% is that money is being indexed over time with inflation. So if we said last year the inflation was 3%, the 100,000 last year should be this year 103,000. So how much did you really make? The answer is you were up about 1,500 over the inflation amount. James, I felt really good until you said that. Okay. That's what all investors fight. This is why they're stocks. You're trying to get higher real rates of return. Why does someone invest in dividends over T-bills and CDs in some cases? They're trying to get higher real rates of return. Okay. Now, I'm going to go ahead and type this in 8860, and then I want to go to your questions, and we're going to go to some other examples. Now, yeah, so the comment from Mary is, I'm new to all this. I need to download the Thinkorswim app. Yeah, I'll show you that in just a second. Let me just show you this trade, show you where can you download this. 95.34 is the current price as we're showing it. It's a little higher right now. We'll see if that order can fill. Got to stop at 88.60. Okay. So that's trade example number 1. Okay. Now I'm going to also go to this and we can do probably 2 more trades here. I want to go back to the question that was asked. Where do you actually download? Okay. So let me send you this link. Okay. Now the comment says, where did I get the 88.60 from? Well, what I did is I took the support level, which was 90.41 on the chart. Show you that chart. Okay. 90.41. Okay. 90.41. And I took less 2%. And that gives us a number of 88.60. Does that answer your question? Okay. Now, second, if we go to this page I just sent you, you're going to now notice at the very tippy top, accounts and products, and you're going to see where it says Thinkorswim trading platforms. If I click on that, you're now going to see, so I'll just click on accounts and products. You don't even have to log in. Thinkorswim trading platforms. Click on that. Scroll down, and you're going to see that right near the top, log in to download. It's just going to ask you for your username and password, and it's going to download the software to your computer. Okay. Now let me just send you that link. That way it gets you right to it. Okay. Now, I also want to go over just something else real quick as far as another example. Now, one of the other stocks that's in there is Target. Okay. Now, we've talked about Target, but Target is in the dividend aristocrat list. Okay. Now, let me show you something just real quick. Now, it's on the first list or second list. By the way, we can click on symbol. Just go to the T. It's not that list. It's on the second one. First one, excuse me. Yeah, it's right there. All right, so it's right there. Now, so our examples are coming from the list, the same list that you have now. Now, if I come back to this and we can send that order, confirm and send, this is saying we're trying to buy those shares at this price or less on NE. Those shares are purchased, sell the stock if they go to that price or less. Why are you doing the stock market? You're trying to make higher real rates of return. Does it always happen? No. Okay. But the goal is that's what you're trying to do. Now, here in this case, notice there's no commission to buy the shares, the U.S. listed equity, and we'll send the order. Okay. Now, what I'm going to do is I'm going to come back to Target for just a moment. Okay. When we look at Target, now, by the way, where else could we see the dividend information? Well, another place we could see is if we go right to the trade tab, okay, trade, and you're going to see when we go to the trade tab, type in TGT for Target, and you're going to see there's a little caret right there. We're going to click on that caret right there, and it's going to expand that section. What is it going to show us? Well, first off, we'll see the yield, okay? We'll see the PE. We'll see what the dividend was for the last quarter. Now, again, when we talk about the yield, we're talking about the annual dividends, the 4 quarters, divided into the current stock price, giving us that dividend yield percentage. The ex-dividend date, okay? And type in the chat if you know what that is, okay? What is the ex-dividend date and why is it relevant, okay? Type that in the chat. That would be a good term that you should know. By the way, there is an income course that you can actually check out right in the learning section on schwab.com. Takes about 3 hours to go through the entire course. That's a very good one that you want to know when is the ex-dividend date, okay? Now, if we look at the chart of Target, we see that information. P of 16, yield 3.72, the payout ratio 60.224. Now, here's the deal. Let's say, example given that the payout ratio was starting to decline and the dividend was the same. What does that tell us? Well, it tells us that the price has gotten higher, okay? Price has actually gotten higher, and that dividend might be staying the same. And that payout ratio, the earnings per share has actually gotten higher, excuse me. And actually what's happened is if that dividend is the same, that earnings per share is growing and they're paying out less in the form of a dividend. That's not a bad thing. And that's showing that the business is growing. That business grows and the company feels like they can continue that growth of the earnings, sales. They might say, hey, we're now going to increase the dividend by a certain amount and so on. Okay. Now, you're going to now notice if we look at the chart, here we are in Target. Target has, now, by the way, let's show a weekly chart for just a second. Okay. So when we look at the weekly chart, Target has been down, but lately it's been kind of starting to grind back up. Okay. If we go back down to the weekly chart, bring it up, it kind of looks like we're in a, what's called an ascending triangle. And we might be trying to push to the upside. How does the investor maybe buy it? Now, if I right click on the chart, I'm going to just go to, let's say, buy custom again with stop. Now, this is not putting a target on it. That's an OCO order, good to one cancels other. We're going to say where would we actually say the support level is. Now, if I said where do we think the support level is, let's say we think it's right at 115. When we say support for dividend investing, we're going back about 2 to 3 months. And we're actually saying, look, we want to set a stop below there. If I took the calculator out, 115.44, less 2%, it's going to give us 113.13. So a dividend investor is not so concerned about the day-to-day fluctuation unless it's really breaching that support level. Now that support level being 115.44, less 2%, 113.13. Data GTC. Okay. Now, as a takeaway from this class, I want you to review the dividend aristocrat list. How many stocks in the dividend aristocrat list are there? 69. Okay. Now, there's other stocks in that list that you're going to find that look like they're having a bullish bounce back to the upside or a breakout. I can mention them, but that's what I want you to do for homework. Okay. So put those lists actually on your Thinkorswim, practice identifying those setups, and actually also evaluate, is it a strategy that you might consider in making a certain section of your portfolio kind of more income-based, dividend stock-based. Now, also I want to kind of give you a quick reminder that when we discuss these things, we stream live on YouTube. On youtube.com, if you were to type in Trader Talks Schwab Coaching Webcast, well, that's going to take you to this page. This page right here, you're now going to notice that you can subscribe for free, okay? And so with that, we also have classes. Let me show you this link, which is going to show you a calendar of classes that we have throughout the day, throughout the month, and so on. So you could actually say, look, I'd like to learn certain things, or I'm a beginner, I'm an intermediate, I'm advanced. We have different classes on all those different topics. So this is the schedule for today. We just talked about dividend stocks, dividend aristocrats. I'll be talking about, let's say, trading the trend in the next session. I covered for Cameron today. That's why I'm doing back-to-back classes. And you're also going to notice, don't forget that over here to the right-hand side, if you said to me, James, I am a beginner, it will actually isolate which classes are for a beginner. Don't forget that. And if you click on, let's say, any of these, it's going to pull up the recordings from those classes. Hopefully you actually see that, wow, maybe you didn't know this. What a nice little treat. And we want to make sure that you're valued and loved as a Schwab client. And we have these resources here available to you to take. Now, remember, with what we discussed here today, it was done for example, illustrative purposes only. At the top of the hour, I'm going to talk about trend trading, okay? A little bit more on the growth component or lack thereof. And we're also going to be, remember with what we talked about here today, it was done for example, illustrative purposes only. And in this class, we talked about investing dividend paying stocks. If you want to join us right at the top of the hour, talk about a little bit more growth, join us. You just need to relog back in there. And don't forget to subscribe as well. That way you can see that stream right on YouTube. Thanks so much for attending. Thanks to Brent, and we'll see you at the top of the hour. Take care. Bye-bye.